Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 15th of July. Starting off with the FTSE 100, where we're still trying to break that resistance line there from back in May, 82.85. Above that, we're looking for the June peak, 83.87 intraday. And the best case is up to the top of that channel there from back in October, 8700. Maybe on a 1 to 2 month view, but at the moment, that seems to be a long way away. If we do break down, 81.60 is the floor of the channel, and if we do break below that, then the risk is of 80.75, and that may support line projection, but so far, looks as though we may get away with finding support at and above the price channel floor. The DAX is next, and here it managed to break out on Friday. It's just testing that May resistance line at 18,650 as new support. Above that, we're looking for the top of the channel there, as high as 19,900 by the end of next month. If we do break down back below the May resistance line, then 18,300 the likely support, but not expecting anything worse than that, given that we've got a rising 50-day line there at 18,400. The Dow is next, and obviously it'll be interesting to see how it reacts to events over the weekend. We closed on 40,000, which was a decent close for the week, and looking for the top of that rising trend channel from this time last year as high as 41,900 by the end of next month. Ideally, we stay above the old June resistance, 39,600, ahead of any push through 40,000 and above. Next up is Bitcoin, which has rehabilitated itself over the weekend, which is obviously rather pleasant. Basically, the cue for a turnaround was the bullish divergence, so lower lows for the beginning of July, but higher RSI trace, so that worked well. Current view is that above the 200-day line, 59,200, we're looking not only for the 50-day moving average at 64,000, but it moved back up to the main March resistance line, just shy of 71,000. Hopefully over the next 2 to 4 weeks. Back below the 200-day moving average then risks a test of 53,000, but we're not expecting anything worse than that now. Moving along to gold, which ended the week on a flourish, and here the view is that while we're above 2,400, which was the initial July resistance, looking for this market to head up to 2,600 by the end of next month. Yes, expecting that kind of move. Only back below the floor of the channel there, and the 50-day line around 23.50, really delaying the upside scenario. Moving on to the stocks, and starting off with what has been a bit of a nightmare of the recent past, Argo blockchain, and difficult to see on a fundamental basis what could help this company, but we haven't been back above neutral 50 on the RSI since the middle of May. What we do need to see here, after the gap down that we had earlier this month, is an end-of-day close above the gap there, around 9.1 pence above that. Then we could head to the top of that falling trend channel from March, as high as 11 pence. Not much on the upside, but at least it would be a start in terms of recovery. And obviously we don't want to go anywhere near or below the 8 pence July support to date. On to a less fraught situation, which is Caspian Sunrise. Here we've hit our initial target there at the top of that broadening triangle from September at 4.5 pence, and looking for the next level up, which is the upper parallel of that triangle, a resistance line there from April last year, heading for 5.6 pence, which hopefully will be done in a matter of days. Big picture, 8 pence to 9 pence maybe by the end of next month. But the key here is that we stay above a recent resistance around the 3 3/4 pence level ahead of a move to, or further move to the upside. Decent contract news from EnSilica, and here we've got basically a bear trap island reversal, so gapping down and then gapping up, and that suggests that the shares should be strong enough to head up to the top of that rising trend channel from back in October. The channel top there at 79 pence. And we may see that by the end of next month. We get a repeat of the kind of January-February rally that we had for the shares. If you're cautious, you wait for an end-of-day close above the 200-day line at 54 pence before taking the plunge. On to Goldstone, which continues to edge higher. Beautiful V-shaped bull flag based at the 50-day moving average. And here we're looking for the shares to fill that gap up to 2.9 pence from last June 2023. And ideally, there's no end-of-day close back below the 50-day moving average at 1.25 pence. New name, for at least for the recent past, is Getech, and here we've got the hint that there's been a neckline break of resistance, that July resistance there around 2.8 pence. Above that, we could head up to the top of that falling trend channel at 4.25 pence by the end of this month, or even sooner, but the key here is staying above 2.8 pence. Genedrive is an interesting situation. The situation in terms of NICE was delayed till the end of the month, but clearly there's been massive buying for the shares on Wednesday, Thursday and Friday. And well done to all those who managed to guess the FDA announcement. Current situation is that we've got a bear trap island reversal, so gapping down there in May and gapping up today. That tends to be one of the strongest patterns around, especially if the shares can remain above the old March support there at 2.8 pence. Above that, we're looking for as high as the top of that falling trend channel from September, as high as 7.8 pence by the end of next month, or I suppose, given the nice news coming up, could be by the end of this month. But the key here, holding above 2.8 pence. Next one is Invinity, and here you can see that we've got into a bull flag type of situation. Just we need to break the recent high there at 23.5 or 23.6, let's say, to be safe. Above that, looking for 30 pence over the following 2 weeks. That would obviously fill the gap there from back in May as well, around the 26 pence level. But for Invinity, above 22, looking for 30 pence over the near term. Stock which hasn't been looked at here for a while is Ovoca Bio, and here you can see that we've got this extended rising trend channel base. Top of the channel there heading for 1.55 pence, which hopefully will be done in a matter of days, especially while we're above recent resistance around the 1 pence level. In fact, one could get quite ambitious about the upside there, but let's just allow the shares to get to the first target, I think. That's probably a wise thing. The other point to note is that we haven't been above the 200-day moving average, the black line there, since back in August last year, so this is quite a trend change. Petro is next, and here we continue to finesse the bear trap reversal, the old November support there at 2.55 pence, and above that we're looking really for the shares to go back to the top of the range, 4.5 pence perhaps as soon as the end of next month. Initial target here, the top of the June gap there at 3.5 pence, while we're above 2.6 pence. Next up is Silver Bullet, which seems to have revived itself with a falling wedge break and an unfilled gap to the upside. While the gap holds there around 76 pence, we're looking for up to £1.25 by the end of next month. I believe there was contract news there on that company, yes indeed, and that should be a decent signal, and both fundamentally to add to the technical plus point that we've seen today. Moving along to Simec, which continues to improve itself. Here you can see that we've got the shares in a V-shaped situation, just waiting for that end-of-day close above 2.6 pence, and if we can get that, then we're looking for the upper parallel of the triangle target that we had there before at 1.8. So above 1.8, looking for up to 3.2 pence by the end of next month, or even sooner. By rights, it probably should be even 3.2 pence by the end of this month, with the two unfilled gaps to the upside and the golden cross also helping the situation. Onto a stock which has taken a long time for the shares to regroup, but we've got a falling wedge breakout here for Verici or Verici, depending on how you wanted to talk about it. Bullish divergence there as well. And initial target here up to 8.9 pence, which is the top of that broadening triangle from back in April. And ideally, we stay on the right side of 6.5 pence in the meantime. Onto a stock which I don't think anybody's heard of, Elle Holdings, but worth a mention on the basis that we're in this broadening triangle, and the top of the triangle there heading for 60 pence. Gap today above the 200-day line. The longer we stay above the gap floor, just below 40 pence, the greater the chance of 60 pence, perhaps as soon as the end of next month. Finishing off with Zenova, which looks as though it is also a recovery situation. Here we've got a bear trap gap reversal, which we had to start the month, and second gap there just the other week. The view now is that while we're above the floor of the second gap there at 1.5 pence, we're heading up to as high as 2.4 pence by the end of next month. That's it from me today. More updates tomorrow.